Imagine walking into your office tomorrow and being told to strip your email signatures of pronouns and abandon your diversity initiatives. Pretend the last 4 years of DEI never even happened. That's exactly what happened to 173,000 Deloitte US employees. But the story goes much further than email signatures. Welcome to the Accounting Influencers podcast. I'm Rob Brown. Today we're going to dive into a very significant shift in accounting. Let's break down what's happening. Deloitte USA announced they are sunsetting their entire DEI program. That's corporate speak for we're shutting it down. No more. They've ordered staff to remove pronouns from email signatures, abandoned their diversity efforts, all of their goals, ended their annual DEI reporting, shut down departments. And here's where it gets interesting. Within hours of this announcement, Deloitte UK, their CEO Richard Houston, sent a memo to his staff saying essentially, not us, we're staying the course. So this creates a fascinating split in one of the world's largest professional services firms. Now, Deloitte's not alone in the retreat from DEI, diversity, equity, inclusion, in case you're wondering. We've seen a shift from major companies, Goldman Sachs, Meta, Google, Amazon. They're all backing away from DEI commitments. But why now? The catalyst is political. The Trump administration, they've issued executive orders. They've marked policies as unlawful in federal agencies, and they don't just apply to private companies. It's creating a ripple throughout corporate America everywhere. And this is what accounting firm leaders need to understand. Deloitte receives, guess how much? $3.2 billion annually through federal contracts. So Deloitte are getting all of this money from the US government. $3.2 billion. So when they say this move is about aligning with government requirements, they're talking about real money there. That's not just an ideology. That's not just someone in HR coming up with something. This is pure hard cash. This is business. But here's the critical question for the business leaders, you firm leaders. What does this mean for your talent, your acquisition, your retention? We're already facing a recruitment crisis in accounting. Only 1 in 9 business graduates choose accounting. Can firms afford to alienate potential talent even more by abandoning diversity initiatives? How would that affect recruitment and retention in your firm? Remember, accounting as a profession, particularly in the West, it's always been non-diverse, hasn't it? It's been stale, male, pale. That's the reputation. And even now, most partners are 50 and over. So it's never been particularly diverse, but you could argue it's been moving in the right direction. So which direction now are you and your firm going to go in? You don't have to be the size of Deloitte to realize this is going to trickle down and hit you at some point. And this is where a third approach, McKinsey's, becomes interesting. Their CEO recently, Bob Sternfels, just made a bold statement. He said, "We will continue to boldly pursue both because these two things together, our diverse meritocracy, is what makes us distinctive." Diverse meritocracy. Diverse means everyone. Meritocracy means elite. I did a bit of Googling on this. I looked up diverse meritocracy. This is what I found. Meritocracy, a key principle utilized in academic, medicine, and surgery, rewards individual achievement. However, it can inadvertently result in a widening disparity between individuals who have access to environments that promote and facilitate elitism and meritocracy and those facing systematic structural barriers. By barriers, that means the kind of barriers DEI has been trying to break down for years. Prejudice, disenfranchising, all these kind of things. So meritocracy, welcome one and all. Diversity, welcome one and all. But you've got to be good enough. It should really be the way of things. But DEI has gone for positive quotas, positive prejudice in trying to get disenfranchised and minority groups into the accounting system to represent a more inclusive society in the accounting realm. Lots going on. What does this mean for your firm? You've got 3 options, haven't you? The Deloitte US approach, prioritize compliance and government contracts by scaling back your DEI initiatives, do what the government is telling you, obviously if you're in the US. You've got the UK approach, so you stick with your strong DEI commitments regardless of any political pressure. And you've got the McKinsey approach, try and thread the needle by walking that line between meritocracy and diversity. I don't know how difficult that would be. We will see how McKinsey plays out. You obviously have other options. You might not be ready to make any of these choices. Maybe you don't have to make any of these choices, but this show is all about keeping you informed. So I'd at least say talk to your staff, talk to your peers, find out what they are thinking, test the temperature of the air, the vibe, the zeitgeist. I'd also stay true to your brand values if I were you. Go back to your website if you don't know them, but What are you all about? If you do roll back DEI, you're probably going to have to go back on any commitments you made to values like diversity and inclusivity. So that's something to consider. If you're in M&A conversations or private equity discussions, you need to be getting ahead of where those partners want to be if you are bought or sold, because that's going to play out, isn't it? So as we conclude, as we always do on this show, here's what accounting firm leaders and professionals who are looking to grow their influence and relevance should be doing right now. I've got 5 or 6 points. First, if you're in the US, review any government contracts and compliance requirements, what's required by federal government law. You might need to stay on the right side of Trump for a few years. If you are not in the US, do this next one anyway. Assess your talent pipeline and recruitment strategy. If you shut down DEI or show to the outside world that you are not focused on DEI, it's not a priority for you, you don't believe in it, then what is that going to do to your employer brand? Remember, your corporate brand attracts new clients, your employer brand attracts new talent and keeps new talent. And how attractive you are as a firm to work for goes beyond your hybrid working, your remote working options, the way you develop your people. It is pure to the brand values that you have, and DEI might well come into that. So assess your talent pipeline, the kind of people coming in and what they are asking for, what they expect from you. That's a big play for you. Number 3, if you're big enough as a firm that you've got international scope, or you belong to an international network, association, alliance, there are plenty of these, you might have to consider your firm's global footprint and the international implications of your stance on DEI. Remember, these networks serve to introduce international business to one another. So if you're a member of a network that has a member firm in Israel and you're based in the States, or a member firm is in Singapore and you're based in the UK, they might pass business to you as part of the network, the alliance, the association. Are they going to continue to do that if your stance is out of step with them in the DEI realm? Something to consider. So think globally. Number 4, evaluate your client base and their expectations, their values, because if they're progressive, if they're left of centre, if they're Democrats, if they're woke, or simply just DEI advocates, and I'm not coming down one way or the other, then your own position and your firm's position on inclusivity is going to be scrutinised. You're going to be held to account. Revenues might be at stake. Would people withdraw their business on the basis of your beliefs or your firm's stance? Possibly. It's all going to shake out. Number 5, develop clear communication strategies for any policy changes. If you're going to sunset anything, roll back anything, stop doing anything, remember this has had a lot of weight over the last few years, so that might represent a U-turn. And accounting firms don't handle change well at the best of times, do they? It's glacial. So this topic is divisive, it's complicated. If you land on a side, you need to articulate why and how, and 100 other things to justify your decisions in your leadership role, in your CEO role, wherever you shake down in your accounting firm. You've got to articulate this to the rest of the troops and get them on board. Look, as we conclude, this isn't just about 2025. The decisions accounting firms make now are going to shape culture for the next decade. We're likely to see a few things. We're going to see increased competition for diverse talent. Do you want to be in that market? Do you want to attract diverse talent? Do you want to widen the talent pool that's available to you? Think about your DEI. There's going to be growing divisions between the US and international firms. You've just seen that with Deloitte, with the example I gave you. There are odds with one another, so it's going to be like this. So if you do have any US partners, or you're in the US and dealing internationally, there's going to be some divisions there, so watch out for that. There's certainly going to be new approaches, isn't there, to measuring and promoting. Is it going to be on merit? Is it going to be on quotas? Is it going to be on diversity? Do you want people higher up in your organization to be representative of the kind of people you hire? Because people lower down, if they are in minority groups, however you define that, they're going to be looking upwards to try and see people like them. So the way you promote, the way you develop people, the way you hire, the way you give perks and afford remote hybrid working to certain people, that's going to need looking at. There's certainly going to be an evolution in how accounting firms handle cultural issues. It's a hot potato, as we say here in England. So your HR department, if you got one, are going to have to be all over that, because there's going to be some pushback on this. The DEI debate isn't going away, but it is evolving. Small firm leaders, you're going to have to recognize that it's not about choosing between merit and diversity. It's about finding ways to achieve whatever it is you need to achieve while navigating the complex political business realities and the people, the human side of things. And if you're wrestling with things like this in your firm, in your life, I'd love to hear from you. Reach out to me on LinkedIn. If you're watching this on our YouTube channel, leave a comment below and get in touch. We're going to be doing another episode down the line as this plays out, giving you more implications of what you need to be doing in your role as an accounting leader, an accounting professional. This has been the Accounting Influencers Podcast. I'm Rob Brown, making sure you stay relevant, informed, and influential. Thanks for sharing the show with your friends, and we'll see you on it next week.